People talk to me all the time about when's the market going to crash? When are homes going to become affordable? When are things going to be better? And my answer is always, the market's not going to crash. Are things going to get better? I hope that things start burning quite as hot. The analogy that we've been using is that we've been going 90 miles an hour in a 60 mile an hour zone. And the reality is, like, now we're going like 75 miles an hour in that 60 mile an hour zone. So the market might have slowed down a little bit, but we still are going like so fast. And I want to walk you through that data, and the data can be a little dry, but stick with me because we're going to go chart by chart as we see this and talk about how all of these numbers fit together to tell a story. So it's really important that you don't just see the first one and go, oh, I know it all. Like, they all tie together. We're going to start with average daily inventory, and that is the number of homes for sale at any given time. And this is really how we can start the conversation about, is the market getting hot? Is it slowing down? Is it something else? Here it is. We're looking at a 1-year look back, and we're right here in July of 2025, and there were 327 homes for sale on average in July. That's actually a tick higher than I expected. And as we can see that actually this band represents the expected average by the statisticians who run these reports. And it's a little higher than that. But check this out. This goes back a year, and that line starts to go up. And this is the highest that we have seen it in several years. So there are more homes on the market. What does that mean? Does that mean that more people are selling? Does it mean that houses are sitting on the market a little bit longer? I think it's actually that second one, and I think that's what the data is going to show us. So let's bring up the next chart. New listings. This tells us how many new houses are going on the market every month rather. And again, we can see that this number has definitely trended up throughout the year, actually peaked so far for the year in May and ticked back down to just under 250. We're at 242 in July. So this number has come up. New listings has come up. But look at last summer. We were at 184, followed by 180. This year, we are at 223, 242. So 40 to 50 more than last year. So on a percentage basis, it's about 25% up. Actually, it's got 32% year over year in July. So that is pretty drastic on a year over year basis. There are more listings coming, 30% more, but 30% more than less than 200 is just not a whole lot just in sheer numbers. So this is what I'm talking about when I say the charts don't really stand alone. And here is where the script is going to flip, and you'll actually see that a little bit. And this is the number of closed sales. And we're starting with the look at July of 2025 here in August. And we can see that in July it was 177. Last year it was 193. We actually closed less sales in July. We can see that it trends down as we get into the winter. That is expected behavior on all of these charts, and then starts trending back up. But it's not peaking out past where it was, and we can actually see month over month down about 9%, almost 10%. Expected change about 7%. Again, we've hit the peak. Summer's coming to a close, and we're going to start diving down. But year over year, down 8%. So closed sales. So this is where I start to make my case that there are more homes on the market, but there are less closed sales. What that means is those slightly more homes that are coming onto the market are also sitting on the market a little bit longer. And I think that's actually a healthy thing. I don't think that's a bad thing by any means. The market was insanely fast, and now it's just really fast. Now, is that a trend? Is it going to continue to get worse, depending on your perspective? Maybe. This is new pending contracts. This is, I saw your house. I'd like to give you an offer on it. Here's my offer. Oh, I accepted your offer. Now we're going to start what some people might call the due diligence period. We're going to start the clock running on getting financing, whether it's a loan or cash, getting all your money lined up, getting inspections, if you're getting inspections, getting appraisals, working through the entire process. On a conventional loan, it's normally 30 days. On cash, you could close in a week or so. It's possible. But new pending contracts this year in July, 158. but we're down 15%, should be about 5% down, but we are up 21% over 2024. So again, we can see this trend line. We expect to see this kind of hits this peak late in the year and then comes down. And then again, it's that same curve and it will continue to go up. And this is where I posit that like it's not changing. The pattern's not changing. We're just slowly, incrementally inching back up. Next up, we're going to look at what is called market momentum, or median days on market. This is the number of days that it takes your house to sell. An average, you take all your numbers, you total them up, and you divide by the number of numbers that you have in the set. A median is the middle number. So if you have 10 numbers, it's number 5 or number 6. I like that because if you have an extremely high or low number, if you have a bunch of $500,000 houses and you have one $5 million house on a regular average, on a mean, that really throws the numbers off. So a median kind of accounts for that. It's the middle number of the set. And median days on market, let's have a look. In July of 25, it was 19, with an expected range of 13 to 14. So just shy of 2 weeks, or 3 weeks, just shy of 3 weeks, up 73% month over month, and 217% year over year. Geoff, oh my goodness, the market is collapsing, it's slowing down. No, I disagree wholeheartedly with that analysis. Check it out. July of 24, this is county-wide, 6. And in West Lafayette, it was 3. West Lafayette's always hotter than the rest of the county. Now, they follow the same trend lines in relation to each other, but West Lafayette's always more expensive and faster. It's a smaller data set, and it's a highly desirable community. It's just facts. Last year, 6 for the county. And we could see it slowly got longer. We would expect that. It's in the winter, and it sped back up, got all the way down to 5 and 5 again in April and May, and then started ticking back up. 11, 19. That means if 300 homes sold in the month, 150 of them sold in 19 days or less, and 150 of them sold in 19 days or more. So that means there are still 150 homes that are selling in less than those 19 days. And 19 days is only 2.5 weeks. And historically, it's been more in the mid to upper 20s range. So we're not even to like historical numbers where we would expect the average to be sitting. It's still fast. It's that analogy of we're going 70 miles an hour in a 60 mile an hour zone instead of 90 miles an hour in a 60 mile zone. Is this a trend that's going to continue? Is it going to get slower and slower? Maybe. Is that a good thing? Maybe not. What's causing that? Shortage of homes on the market, global macroeconomic issues going on. Politics plays into that, no doubt. But people always have to move. People are always getting new jobs, getting promotions, having babies, dying, getting married. All of the things people need to transact real estate doesn't stop for any one reason. It keeps going for a whole lot of reasons. This is a good one that kind of is a snapshot of a lot of the data that we have talked through here and really puts a good kind of button on the data. Months of inventory. I went to the wrong version. Months of inventory in July, it was 2.2. Check out the line though. It was 1.2 a year ago. We're up 15% month over month, 79% year over year. And we can see the trend line again. Last summer, ticks back down in the winter months and then starts climbing back up to 2.2. We have so much more inventory. This is, if no other houses came on the market, how long would it take for us to sell through the existent inventory? And the answer right now is 2.2 months based on the current rate of sale. Oh, that's so much slower than 1.2. Yes. But a balanced market is, we think it's about 3 months now. Historically, like going back multiple decades, it's probably been thought of as more like 4 to 5 months. But the reality is today's numbers and statistics and market and economy is it's probably about 3 months is the real number for a balanced market. We're still a third under that. We're at 2.2. Are there enough houses for sale? Absolutely not. That's what this is telling us in a snapshot. I'm going to look at just 1 or 2 more here as we wrap up. As we get closer to the end, if these numbers interest you and you want to know about numbers about your own home, go to thelafayettereal.com/YouTube and fill out the form. and let's work together so that I can be your local Lafayette real estate resource of choice. What are house prices looking at? Geoff, they're so expensive. What are we going to do? Can't afford a home. Let's wait till the prices go down. Again, this is a 1-year look back, not a 10-year look back. We looked back 10 years the last time, and we may do that next time. I like to alternate zooming in versus zooming out. Here we go. July 2025. The median sale price of all homes sold, $320,000. Last year, it was $315,000. Again, look at this curve. This isn't much of a curve, really. Look at this line. Ticks down December, January, February, shoots back up when we get into the spring and hovers around here, and it'll do the same thing again. $320,000, minus 3% month over month, but plus 2% year over year. Past performance is no guarantee of future gains. That's the old financial investor line that gets used a lot. There is no guarantee that real estate will always go up. But there are many charts out there that show that basically real estate always goes up. It might tick down briefly for a moment somewhere along the way, but it is not going to crash. So when's the best time to buy? Yesterday. What's the next best time to buy? Today. So if you're interested in buying here in the Lafayette area, go to the LafayetteReal.com/YouTube, fill out the form, and let me know how I can be your local Lafayette real estate resource of choice. Finally, get the whole, people are paying too much for their house. People are paying too much for their house. Oh my goodness, I'm not paying that. Well, are people getting what they ask for their houses? This is sale price as percent of listing price in Tippecanoe County. And let's take a look and see, are they getting what they ask? The answer in July of 2025 is they're getting 97.3% of their asking price. It's only down 1% month over month. And it is down 1% year over year. And we've got that same pattern that we see again. Straight line, ticks down a little bit in the colder months, grows back up, has come down a little bit. But 97.3% for all intents and purposes, that's a rounding error. That is 100%. That 2.7%, that is sellers closing concessions to the buyers. That is a little bit of down payment assistance in the form of concessions. That is some repair concessions. That is nothing beyond that. I was asking for that sort of thing from sellers on behalf of my buyers throughout the last several years. Even when the market was hottest, I would still send offers, strong offers saying, we want to buy your house. Here's an offer that includes some concessions, but we're going to structure it in such a way that is beneficial to my buyer, of course, but is also beneficial to you. You're going to get your house sold. So that 97.3%, that's 100%. Those are just completely normal, small percentage point concessions that happen on a daily basis in our local real estate market here in Lafayette. And if you're interested in Lafayette real estate, in Lafayette and West Lafayette or Tippecanoe County, I want to be your local Lafayette real estate resource of choice. Go to the LafayetteReal.com/YouTube. Fill out that form and let's work together. Whether you need a home to live in, whether you need to sell your home, you're upsizing, you're downsizing, you're renting, and you want to stop giving your money to a landlord, go to the LafayetteReal.com/YouTube and fill out the form. And when you're done doing that, or right before you do that, go and hit the like and subscribe button so you don't miss a minute of all of the great videos that we put out here on the Lafayette Real on a daily basis, and our live show every Monday at Lafayette Live, Mondays at 7 o'clock.